Good afternoon, ladies and gentlemen. I'd like to welcome you during the conference call for investors and analysts on TAURON Group's H1 2020 financial results. The host of today's meetings will be Mr. Wojciech Ignacok, the CEO of TAURON Polska Energia, and Mr. Marek Wadowski, the CFO of the company. During the Q&A session, we will have also Mr. Dariusz Niemiec, the Executive Director for the Market Operator and Trading, Roland Makieła, the Executive Director for Controlling, and Sebastian Gola, the Executive Director for Analysis. My name is Martin Lauer. I'm working for the Investor Relations team. I'd like to remind you that the conference call is simultaneously interpreted into English. Outside of this session, you can also listen to our meeting via teleconference. I also like to encourage you to ask questions via a form available on the website of the broadcast. Due to the data protection regulations, we will not give you your contact details, your name, but can provide the name of the institution if you enter this information in the content of the question. Mr. CEO, please have the floor. Ladies and gentlemen, it's a great pleasure for me to welcome you for the first time in my new role during the conference call as the President of the Management Board of TAURON Polska Energia. For safety reasons, our meeting is held via a conference called a video conference. During the conference, we will present to you financial results and operating results achieved by TAURON Group in the first half of 2020. During my part of the presentation, I will present to you the overall financial situation of the group. I will describe the highlights and the capex. On the other hand, the CFO, Mr. Marek Wadowski, will describe the macroeconomic situation and present the detailed financial results broken down into individual lines of business. On this slide, we will present the financial results and the operating data achieved in the first half of this year. I'd like to draw your attention to the very good financial results on the EBITDA level, which came in at 2.4 billion PLN. It's worth noting that the sales revenue went up 6%, up to almost 10 billion PLN. The net debt to EBITDA at the end of the first half of this year reached a safe level of 2.66. In case of the operating data, it's worth mentioning when this is the result of the market situation, the effects of the coronavirus pandemic and the trading strategy of our group. On this slide, we are presenting the financial data and operating data of the company for Q2. The trends visible in this period were the same as the ones we observed during the entire first half of the year. On the next slide, we are presenting several highlights, important events that took place in the first half of this year. In March of this year, we signed a loan agreement worth 1 billion PLN total value to finance general corporate purposes, excluding the financing of the coal assets. The next important event as part of the financing of the green turn of TAURON was the signing of the agreement with the Polish Development Fund. The agreement defines the framework conditions for the joint investment project in renewable energy sources. It's worth reminding that in the first half of this year, we also reached an agreement with the workforce on reducing the working time at TAURON Wydobycie, TAURON Mining and TAURON Generation. Thanks to that, we'll be able to adjust the level of production output of our coal mines to the reduced demand for coal. Additionally, in the second quarter, we agreed on the changes to the collective bargaining agreements, which allowed us to dissolve provisions in the amount of 530 million PLN. I'd like to thank the workforce for this agreement. As far as carrying out our large investment projects, worth recalling that according to the agreement with the contractor, the commissioning of a unit in Jaworzno should take place by the end of November this year. We're also running a process aimed at selling the shares in TAURON Ciepło, TAURON Heat. Now we are conducting negotiations, including negotiations with PGNiG, Polish oil and gas company. Now I'd like to hand over the floor to Mr. Marek Wadowski, the CFO. In the second half of 2019, we observed in the Polish economy a systematic weakening of economic conditions, economic downturn. Additionally, in the Q2 2020, we have the coronavirus pandemic and especially harmful economic effects of this pandemic, which led as a result to the drop of industrial output, manufacturing output, decline of electricity consumption. Comparing the first half of 2020 versus the same period of last year, the decline came in at more than 5%. The electricity imports during that time went up by more than 42%. And the electricity production in Poland dropped by almost 8%. It's worth noting that the biggest drop of electricity production took place with respect to the conventional hard coal and lignite-fired generation sources. The basic financial data for the first half of this year, first of all, the sales revenue, which were higher during this period under review, thanks mainly to the high electricity sales prices and the higher distribution services rate. The net result in the first half of 2020 was negative, mainly due to the impairment charges related to the assets, carrying value of the assets. Those impairment charges came in at more than 1 billion PLN. Had we not taken into account the impairment charges in the net financial results, the net financial results would come in at more than 680 million PLN. The comparable EBITDA, so adjusted, excluding the one-off events in the first half of 2020 versus last year, shows a decline by 10%. In Q2 alone, the situation is similar as in the first half of this year. Here we are also dealing with a decline of EBITDA, of a comparable EBITDA at a slightly less level of 8%. Our largest segment has been invariably the distribution segment. We generate 70% of our group's EBITDA in the first half of 2020. It's worth noting the growing share in EBITDA coming from the renewable energy sources segment. Similar situation we can observe in Q2 alone. Analyzing the impact of individual segments on the EBITDA in the first half of 2020, we can see that the biggest positive contribution came from the distribution segment, where there was a dissolving of the provisions for the employee benefits worth 425 million PLN, and the mining segment, where we posted a positive result. The generation segment had a negative impact upon EBITDA in the period under review. In Q2 alone, the biggest impact came from the distribution segment and from the mining segment. Now, moving on to the results of individual segments. Let's start with the distribution segment, which, as I mentioned, is our largest segment. The biggest impact outside of the dissolving of the provisions for employee benefits were 425 million PLN, came from the price. The positive impact of the price was due to the fact, first and foremost, that the price for distribution services last year was approved by the President of the Energy Regulatory Office starting from as of April 6. So the entire Q1 last year was based on the prices of 2019. The decline of the volume during that period was mainly due to the economic effects of the pandemic and the deterioration of the economic situation. The decline was almost 6% during this period under review, the main reason being the decline of volumes in the B and C groups. Both of these groups are responsible for more than 90% of the volume decline. B and C groups are small and medium enterprises. We are observing a slight increase in the G group, namely the households. In Q2 alone, in the distribution segment, we can clearly see a significant impact of economic effects of the pandemic. The decline of electricity distributed volume is almost 10%, whereas for the entire H1, the main reasons being the B and C group declines, so the small and medium enterprises consuming less electricity. Moving on to the quality parameters related to the distribution segment, we can see that they are looking quite good. Comparing it to the parameters that are outlined in the President of Energy Regulatory Office decision, we don't see any danger, any threat that the parameters that we achieved in the first half of 2020 could have a negative impact on the tariff in the subsequent periods. We do hope that this trend will continue throughout 2020. Ladies and gentlemen, let me move to the next segment, the new segment that we've been reporting for some time now, the renewable energy sources segment. It's worth indicating in this segment we are seeing a significant increase of production and increase of EBITDA as well. The EBITDA growth is mainly due to the increase of electricity volume produced by wind farms. This growth of the produced volume came from two factors. First of all, the operation throughout the first half of this year of the wind farms that we acquired in September last year. And secondly, good weather, good wind conditions as compared to last year. It's also worth noting the positive impact of the higher prices of certificates of origin of electricity. With respect to fixed costs, we are showing you the negative impact upon the EBITDA in the order of 33 million PLN. This impact was primarily due to classifying as fixed costs in the first half of this year the cost of operating the wind farms acquired in September last year. And secondly, from the provision that we set up in the region of 17 million PLN for the real estate tax for 2018, which was based on the decision of the Constitutional Tribunal regarding the definition of a building structure as of July this year. In Q2 alone, ladies and gentlemen, the situation in the RES segment, renewable segment, is similar. Nevertheless, here the result is a bit lower, mainly due to setting up a provision that I have just mentioned. In the generation segment, we are dealing with a one-off event, and this event will be having a lesser and lesser impact on the result in the subsequent periods. This was the event that involved swapping the futures contracts that provide the hedging for the prices of CO2 emission allowances, contracts concluded on the exchanges, swapping it with the contracts concluded with financial institutions. This way, there is no need to deposit margins. So from the liquidity point of view, it's a very beneficial situation for the group. However, nevertheless, due to this swap transaction, we reported a negative impact on the EBITDA, which was due to the price differences. This negative impact will be getting less and less as we continue to settle those contracts. Nevertheless, in the first half of this year, the impact on EBITDA was 112 million PLN coming from that source. A very significant impact upon the generation segment came from the electricity margin electricity. This was a negative impact, mainly due to the increase of the prices of the CO2 emission allowance prices. The CO2 emission allowances prices in the first half of this year in the generation segment went up by more than 70%. And at the same time, the production dropped by 24% due to the market conditions. One can summarize it saying that the price of electricity does not cover the cost of production of electricity, of course, mainly due to the increase in the prices of the CO2 emission allowance prices. Q2 alone also was impacted by the market conditions. Here in Q2 alone, the price of CO2 emission allowances went up by more than 50%. The decline of production came in at 22%. As a result, the generation segment posted a much lower EBITDA than last year. One more fact should be mentioned here. Namely, the 910 megawatt unit in Jaworzno was not commissioned as planned in the beginning of 2020. We assume, as the CEO mentioned, that this will take place on November 15th, the commissioning. However, due to the sales of electricity from this unit from the beginning of this year, we are purchasing electricity on the exchange, carrying out our sales contracts. Therefore, the EBITDA for this achieved this way will be included in the entire group's EBITDA, but it will be shifted, transferred from the generation segment to the supply segment. So one can say that had the unit been commissioned on time, this EBITDA would have been seen in this segment, but as it is, we see this EBITDA in the supply segment. Moving on to the next segment, which is practically new starting from this reporting period, namely the discontinued operations. One should indicate what was the reason. The reason is the fact that we are conducting now talks with the Polish oil and gas company, PGNiG, about the potential sale of the TAURON heat subsidiary sale, and according to international financial reporting standards, such assets should be reported as the assets held for sale, and therefore they should be treated as discontinued operations. The results of the negotiations or agreement with PGNiG we are not certain of yet. We don't know the results of the negotiations, but already we are reporting the TAURON heat subsidiary, TAURON heat line of business as a separate segment. The biggest impact on EBITDA came from weather conditions. As we all remember, we were dealing with an extremely warm winter this year. As a result, the heat supply, heat sales were lower. Additionally, the market condition on the electricity market brought about a situation where the margin of electricity also in this segment is lower. We are dealing with a similar situation if we compare Q2 2020 versus Q2 2019. In the supply segment, as I mentioned before, a very significant element is reporting the positive result on the transaction of repurchasing of electricity from the 910 megawatt units in Jaworzno. The amount of the positive impact on EBITDA in the first half of this year is more than 220 million PLN. By that much, the supply segment's EBITDA is higher. We are reporting it on, we are showing it on the slide under the item electricity price and volume. During this period, we were dealing with a decline of volume. Therefore, the impact of this factor, the electricity price and volume factor, is 115 million PLN, is much lower than the effect of the repurchase of electricity from the Jaworzno unit. Property rights in the first half of this year were more expensive than last year. Therefore, this has a positive impact upon the renewables segment, but has a negative impact upon the supply segment. In this segment, the prices of the property rights went up by more than 30%. In Q2 alone, also, we are reporting in this segment the effect of the repurchase of electricity from the 910 megawatt unit. The impact on EBITDA in Q2 alone of this factor is more than 110 million PLN, and it's worth noting that Q2 is the most difficult one for the supply segment due to the economic impact of the pandemic. Therefore, the decline of supply volumes. However, it's also worth noting that the impact of this pandemic on this segment is much smaller than we had originally expected. We assumed that the impact will be much greater, the situation will be much worse. The mining segment in the first half, also in Q2, reported a positive EBITDA in the region of 7 million PLN in H1 and more than 40 million in Q2. This was a consequence of two important factors. Firstly, we signed an agreement with the workforce in the mining segment, which enabled us to take advantage of the anti-crisis shield relief package. The overall impact inflow of cash is 32 million PLN in H2. Let me mention that this agreement covers 3 months, May, June, July. So in H2 this year, we'll have an additional inflow in the amount of 16 million PLN. And the second important factor is the market situation related to coal. Due to the much lower demand for coal within TAURON Group and also nationwide, the inventory levels of hard coal are going up. The increase of inventory levels while it's taking place has a positive impact on EBITDA due to the fact that we are not reporting the cost of producing this coal in the P&L statement. We are showing it as a balance sheet item inventory, which is related to the applying the principle of the accounting, the correspondence of revenue and cost. While we are reducing the inventory levels, the impact of this operation will have a negative impact upon the EBITDA. Therefore, we expect that for the full year 2020, the EBITDA reported by the mining segment will still be negative, despite the positive result in H2 and in H1 and in Q2 alone. We can see here the Q2 alone. The situation is similar as for the first half of the year. An important element is the increase of inventory levels. We are assuming that in the second half of this year, the production of coal will be lower than H1. Therefore, we will not be reporting this increase of inventory levels in H2. The financial position of the group in the first half of this year was stable. The net debt to EBITDA ratio is 2.66, while the maximum allowed level being 3.5. So we can say that the situation was safe. At the end of June 2020, the available sources of financing for the group is more than 3 billion PLN. In 2020 and 2021, we don't have the maturities to repay of any large debt amounts. Such large amount comes up at the end of 2020. We are already preparing ourselves for this repayment. We have some time left, so we are confident that our efforts will be successful in this respect. Let me now hand over the floor again to the CEO. Ladies and gentlemen, the largest capex project in terms of value carried out by TAURON is the construction of a 910 megawatt generating unit in Jaworzno. The current work progress at the construction site is more than 98%. The unit is in the startup stage now. Let me emphasize that yesterday the unit was successfully synchronized with the national power system. The next important project that we are implementing is the construction of the CCGT unit at Stalowa Wola. The unit received the permit for operation, which is legally binding. All the technological systems have been completed and the processes have been completed. We have entered with this unit into the hot startup phase. On the slide, we are also showing the project will involve implementing heat production at the 460 megawatt unit. It was the picking and backup boilers at the Łagisza power plant. As you can see, this investment project has practically been completed. The final item presented on the slide is the investments related to the adaptation of generating units to the operating conditions, which will come into force beyond 2021, so that they could meet the bad conclusions requirements. In the first half of this year, we spent 135 million PLN on this project. The capex of TAURON Group in the first half came in at 1.8 billion PLN. Similar as in the previous period, the largest capex was allocated to upgrade the grid assets and the installing new grid connections for new customers. The capex in the distribution segment came in at more than 900 PLN. The capex in the generation segment came in at 700 million PLN, including 300 million PLN spent on the construction of a Jaworzno generating unit. Ladies and gentlemen, this is where we'd like to finish our presentation, and we are ready to answer your questions now. Thank you very much to the management board for the presentation. We have more than a dozen questions. A few of them are related to the situation, the impact of pandemic on the financial results of TAURON Group and the situation of TAURON Group in the first half. This was already discussed in the presentation, but Mr. President, please provide some extra information if we may. TAURON Group undertook a number of preventive measures aimed at protecting the employees of individual subsidiaries of TAURON Group. A dedicated crisis management team was set, with its task being to assess the situation in individual lines of business of our group. Individual subsidiaries, we have anti-crisis teams. We implemented the necessary organizational changes in the individual subsidiaries to increase the security, the safety. In the mining segment, we reduced the work time and the wages were reduced by 20% for a 3-month period, starting from May 1st. Similar in the general segment, from May 1st, the wages were reduced by 10% in this case, and the working time was reduced. These measures allowed us to acquire funds under the anti-crisis shield in the region of 50 million PLN, as mentioned by Mr. Wadowski, the CFO. However, as far as financial results are concerned, the COVID impact was such that in the distribution segment we observed a significant drop of electricity volumes delivered to the consumers in the region of 6%. In the supply segment, we are observing around 6% declines in the supply volumes on an annual basis. And also we observing an increase of applications, requests by the customers to extend the payment terms, and the group estimates that the impact on the first half on the EBITDA was about 140 million PLN. As of August 19th, entire group, we have 66 employees infected and 305 persons under quarantine. The largest number of persons infected is in the mining company, 18% of the distribution, 15%. From the beginning of the pandemic, we introduced the remote work where it was possible in the distribution and production companies. Thanks to the enforcement of all the measures, we didn't observe major hotspots. Another question: are the terms of the transaction or potential heat sales, TAURON heat sale to Polish oil and gas company? If so, please provide those terms or provide maybe the date when the management board expects to complete this process. Ladies and gentlemen, as of now, we are conducting the negotiations with the Polish oil and gas company, PGNiG. We extended the exclusive rights for these negotiations up to roughly mid-September this year. We don't know yet the results of those negotiations. We are expecting that if we come to an agreement on the terms of the transaction, of a deal, and if the deal were to take place, the deal would take place at the turn of the year, at the end of 2020, beginning of 2021. However, at this point in time, it's difficult for us to predetermine what the results of the talks conducted will be. Once we reach the agreement, we will provide the appropriate information to you. We have several questions under a single package, so I'd like to read them one by one. How come you had such a good supply segment result, 173 million of EBITDA despite the pandemic? What is the impact of lack of the operation of Jaworzno unit? Let's start with those two questions. As I have already mentioned, in the first half of this year, due to the fact that we are repurchasing electricity sold from the 910 megawatt unit, we posted quite a material positive impact upon the earnings in this segment. The total impact, only due to the repurchase of electricity, the 226 million PLN during that period. I'm talking the entire first half of 2020. This result was possible thanks to the market situation, because on one hand we are dealing with a situation where the electricity price is unfavorable for our unit. That's why we have such a large decline of electricity production nationwide from generation in conventional sources based on hard coal. But on the other hand, if we are dealing with such a situation where we sold electricity and we cannot produces, so repurchasing, buying back this electricity gives us a positive effect. So this way it's an effect of market situation and the actions that we are taking in the trading area with respect to repurchasing electricity that we had already sold from the 910 megawatt unit. Had it not been for this factor, of course, then the supply segment's earnings would have been much lower. We do expect that thanks to this operation for the full year, the impact on the EBITDA of a 910 megawatt unit will be practically unchanged versus our original assumptions. We had assumed the EBITDA of more than 300 million PLN this year, and we do expect that the market situation will enable us to post such a result. It does not mean, of course, that for the group we perceive it as a positive development in such a way that thanks to the market situation we are able to maintain the EBITDA result. But of course we do want this unit to be commissioned as soon as possible. Thank you. And what is the current net value of TAURON heat assets after including the impairment charges when the transaction deal with the PGNiG, and does the company want to sell its stake in the Stalowa Wola project? The carrying amount of assets after impairment charges a little more than 1.3 billion PLN. The transaction with the Polish oil and gas company is being negotiated on the exclusive basis. So it's difficult to determine what the results of the talks will be. As I mentioned before, once we know the result of those talks, of course, we will disclose this information to you. With respect to Stalowa Wola project, let me remind you that the company at the end of May 2019 published its strategy, where we included an element of divesting the shares in the Stalowa Wola CHP. We continue to maintain our strategy. We're upholding our strategy. If nothing has changed in this respect, if we are conducting negotiations or we have an advanced sales process, of course, we will disclose this information to the market. Thank you. Another 2 questions. Are you conducting the process of divesting the coal mines now or liquidating the coal mines? Do you expect the return by the Energy Regulatory Office in 2021 under the RAB model? In the mining segment, a lot is dependent upon the result of agreements that are now being discussed by the Polish mining group. We do assume that the decisions reached by the Polish mining group will have an impact upon the entire hard coal mining sector in Poland. And from our point of view, that's the way we see it, is that whatever actions we take will, of course, be aligned and subordinated or in line with those agreements reached at the Polish mining group. It's difficult for us to determine what the result of those decisions will be, but this will be a very important element impacting the entire hard coal mining segment in Poland. That's why now we are not conducting any divestment or liquidation of the coal mines process. According to the strategy, we were analyzing the possibility of selling the Janina coal mine. It didn't take place. We continue to analyze the opportunities, possibilities that we should take into account in terms of the mining segment. But as I have already mentioned before, for us the most important thing is the result of talks held at the Polish mining group, PGG. In case of the distribution segment, it's difficult to say at this point in time whether this model will change in 2021, the current model, RAB-based model. If I were to make a bet, I would probably make a bet that this transition solution will be in place. but I'm not able to exclude any ultimate solutions being implemented. However, the transition solution also for 2021 alone is potentially possible. Thank you. There's several questions regarding the financial shield. How much, according to the management board, can the company get in aid from the Polish Development Fund, PFR, financial shield in Q3? Now we are analyzing the opportunities, the possibilities that the group has in this respect. What is very important is, as I mentioned before, the impact of the pandemic, the impact of economic effects of the pandemic, because this is most importance for the financial results of our group, is definitely smaller than we had originally anticipated and assumed. It is true that the impact is negative, especially in the distribution and supply segments. The consumption of electricity dropped, the distribution volumes dropped, the electricity sales dropped. However, this impact is not so significant as in case of such industries as airlines, restaurants. Therefore, looking at the entire economy and looking at the solutions available as part of the anti-crisis shield relief package, one should take into account the fact that the impact of the pandemic is not so dramatic, is not so large in our industry, and therefore we are relatively limited in the opportunities, possibilities of taking advantage of the shield. If we looked at Q2 alone, in terms of sales revenue, it's difficult to say that in Q2 alone, group-wide, capital group-wide, it's difficult to notice the major impact of the pandemic. The sales revenue versus Q2 2019 went up by 9%. So had we not known that pandemic occurred, probably we would not have been able to get this information based on the results. So of course we are reviewing the options of what advantage we can take from the anti-crisis shield relief package, but we are not the company definitely that will be the first in line to be able to take advantage of such solutions. Thank you. Questions from the PKO BP brokerage house. Two questions from them. Do you share the view that TAURON should have at least a partial share in the mining assets due to the security of supply, the very good result in the production results in the mining segment, despite the reduction of the working time by 20%, was related to the favorable geological conditions? Were there any other factors behind it, or what are your expectations for H2 in terms of the mining segment? Ladies and gentlemen, the question how mining should be operated after the agreements are reached after the talks conducted by the Polish mining segment, Polish mining group, irrespective of what the outcome will be, the production of electricity from coal, including hard coal, will be an important part of the structure of electricity production in Poland. It's true that in the first half of this year, the total share of electricity generated from hard coal and lignite was the lowest up to now in the entire history, a bit more than 70% it reached. Before it was always way above 90%. However, it continues to be a substantial share. So therefore, it's important what the model will be like in the future. From TAURON Capital Group's point of view, hard coal is needed, of course, for the units to be operated, and from the security point of view, we need access to such hard coal. The solutions regarding this aspect may vary. Those solutions don't have to involve the equity ties. The contractual agreements, the sale agreements are also ties that are strong enough so that they could ensure the security of supply. It is important, not so much, it is not so important whether TAURON Group has shares, has a stake in such a entity, but what's important is the entire shape of the market, how the market will be organized. From my point of view, I can say that definitely the transition, the transformations must take into account, of course, the security of energy supply, but also take into account the fact that we can see in this year that the demand for coal is definitely lower. And also, in case of such situation, we need to be prepared for such situation. So, to sum it all up, we don't have to necessarily have a stake, have shares in such an entity, but definitely for the security of energy supply, the important is the entire setup, shape of the hard coal mining sector and how the sector will be responding to what's happening in the environment. So how it will be responding to the transition of the entire power sector. Another question of the analyst related to the outlook for H2. Of course, here the main component that had an impact upon the positive result of both H1 and Q2 alone was an increase of inventory levels. But we do expect that for the entire full 2020 year, the EBITDA in the mining segment will be lower and way lower, much lower. We expect, as a matter of fact, the negative EBITDA for the full year for the mining segment. It'll be likely to be lower than last year, but it will still not be a positive EBITDA. However, it's also worth noting that we have a much better production situation in terms of production. And here we can say that unfortunately the market is not supportive for this segment, because in the first half of this year we had much better situation in terms of production. Of course, wouldn't have had such a positive result had it not been for those production output. But now the production capacity is being limited due to the difficulty selling that coal, and this is the main factor that will have an impact upon the earnings of the segment and the situation regarding the production for the full 2020 year. Ladies and gentlemen, thank you very much for accepting our invitation and participating in the conference call, the video conference call. We'd like to already today to our next meeting after we report Q3 2020 results. In your daily operations, you can contact our investor relations teams. Please contact us directly. And for now, thank you very much and see you next time.